Asian shares higher after sell-offs spurred by Chinese virus. Bangkok, AP, shares were mostly higher in Asia on Wednesday after US stocks tumbled overnight as a virus outbreak in China rattled global markets. Japan's Nikkei 225 index climbed 0.7% to 24,031.35 and the Kospi in South Korea surged 1.2% to 2,267.25. In Hong Kong, the Hang Seng jumped 1.3% to 28,355.10. The S&P ASX 200 in Sydney gained 0.9% to 7,134.60. The Shanghai Composite Index recovered from early losses, picking up 0.2% to 3,060.75. India's Sensex lost 0.3% to 41,218.64. Shares fell in Malaysia but rose in Singapore and Indonesia. There was little regional news apart from the virus to drive trading, though South Korea reported better than expected economic growth in the last quarter of 2019. Its GDP rose 1.2% from the previous quarter, an improvement on the previous quarter's 0.4% growth. Economists attributed the stronger growth to increased government spending, reduced trade friction and a recovery in demand for semiconductors. It continues a noticeable trend of improving data in Asia over the past few months, which does imply a recovery is underway, Jeffrey Halliavander said in a commentary. However, he noted that a soft underbelly of risk remains, as evidenced by the worldwide retreat in financial markets Tuesday on news the new coronavirus can be spread between humans, not just between animals and humans as earlier suspected. On Wednesday, Chinese authorities reported the number of people confirmed infected by the virus first reported in the central Chinese city of Wuhan had risen to 440, with 9 deaths. One case has been reported in the US. Wall Street's overnight sell-off snapped a 3-day winning streak by the S&P 500. Investors worry that the new coronavirus spreading in the world's second-largest economy could hurt tourism and ultimately economic growth and corporate profits. The outbreak has coincided with the peak travel season in China for the Lunar New Year festival, and stocks of U.S. companies that cater to Chinese tourists had some of the biggest losses, along with general travel companies, such as casinos and airlines. Along with banks, industrial and energy stocks accounted for a big share of the selling. Those losses outweighed gains in real estate stocks, utilities and household goods makers. Traders also shifted money into U.S. government bonds, sending yields lower. From an investment standpoint, the risk with any virus is in the scope of its economic impact, and the mere fact that this has spread from China overnight to the US so quickly reinforces the idea that the negative fallout could be global rather than local, said Alec Young, Managing Director of Global Markets Research for FTSE Russell. Las Vegas Sands fell 5.4% and Wynn Resorts tumbled 6.1% for two of the largest losses in the S&P 500. Both casino companies. For more on this story, visit the news article link.